Everything we've covered in Module 2 has been a framework. Tools for building and managing your virtual investing organization that work regardless of which instrument you trade, which approach you've chosen, or where you are in your development. This final episode is different. Instead of the framework, we're going to walk through the specific decisions that we made for the $1 Million Experiment's own virtual investing org, what we looked for in each engine, how we found it, and what the process taught us. Now, we won't be naming specific mentors or channels. What works for the $1 Million Experiment's specific approach and situation may not be the right one or the right fit for yours. And we don't want to accidentally stomp on your own evaluation process. What we will share is the reasoning behind each decision, why we chose the instrument we chose, what criteria we applied, and what we found when we went looking, and what the trials revealed that we didn't expect. There's a reason we saved this episode for the end, rather than opening with it. The Virtual Investing Org walkthrough is only genuinely useful if you have the evaluation framework to interpret it. Without the gap map, the credibility tests, and the 30-day trial process, a behind-the-scenes account of our Virtual Investing Org is just a story. But with those tools in hand, it becomes a worked example, something you can use as a reference point for your own decisions. And one more framing point before we start. The $1 Million Experiment's Virtual Investing Org is not finished. It's not a static structure that was built once and left alone. It's actively managed, it's regularly reviewed and updated as the system grows and our needs evolve. What we describe today is where the Virtual Investing Org stands at this stage of the experiment. It's not a final configuration. And that is actually the right way to think about your own Virtual Investing Org too. You're not trying to build something perfect from the start. You're building something good enough to begin with and then improving it through experience. The framework from this module is what makes that ongoing improvement systematic rather than accidental. The income engine decision started with the instrument, and that decision came together fairly quickly. We chose Micro E-mini S&P 500 futures contracts for three specific reasons. First, the leverage characteristics allow you to generate meaningful monthly returns from a $3,000 starting account. The capital efficiency is significantly better than most equity or options approaches at that account size. Second, the scalability is clean. One contract per $3,000 in the account, with the monthly income target scaling proportionally as the account grows. The same risk rule and the same return target apply at every level. No complicated decisions as the account scales. And third, the near 24-hour trading window makes it possible to find a session time that fits just about any schedule, wherever you happen to be in the world. Those three factors made the futures the right instrument for the $1 Million Experiment's design. Your instrument decision should come from the same kind of analysis. Which approach fits your account size and your schedule and your capital efficiency requirements and your capacity to develop the skills required? Futures happen to be the answer for us. It may or may not be the answer for you. Finding the right mentor for the income engine took considerably longer than the instrument decision. And the process produced one of the most practically useful lessons that we can share from this whole module. We did not find the right mentor on the first try, or even the second. The first two mentors we trialed both taught genuine, legitimate futures trading methods. The credibility tests were not the issue. What the 30-day trials revealed was a style mismatch that we had not adequately assessed from the content alone. Both methods were built around a rapid-fire scalping model. Short time frames, many trades per session, fast decision-making under constant time pressure. The pace was simply too fast for how we wanted to operate. We found ourselves reacting rather than thinking clearly. The pressure did not feel sustainable over months of daily trading. The methods were valid, but the fit was not there. The third trial was different. The approach was still active. After all, this is not a passive set and forget sort of method, but the pace was one that we could sustain. Setups developed at a speed that gave us time to think before acting, rather than having to react instinctively. The mentor's content addressed the psychological dimension of trading directly and consistently, and not just the mechanics. The community engaged with real situations that members were navigating in current conditions, including difficult stretches, not just the clean outcomes. And the risk management was explicit, specific, and treated as the foundation of everything else. The lesson from that process bears repeating with the full context behind it. The 30-day trial is not a formality. It's the only reliable way to discover dimensions of fit that cannot be assessed from content alone. Pace and psychological sustainability are the two things most commonly underestimated before a trial and most clearly revealed during one. Do not commit to an income engine mentor without running the trial. If the first trial does not produce a confident hire decision, move on to the next candidate. A month of trial time is a far lower cost than 6 months committed to the wrong mentor. The mentor we settled on produces content and community engagement on a daily trading cadence, addressing what the market is doing in each session and not just providing guidance at a weekly or monthly summary level. For an active trading approach, that daily presence matters. The psychological support that comes from a mentor who's engaged with the same market conditions you are turns out to be as valuable as the method itself. One thing we didn't fully anticipate was how important the mentor's content was going to be during difficult stretches. Every trading approach goes through periods, sometimes a few sessions, but sometimes even a week or two, where the setups are not producing the expected results, or market conditions are simply not playing to the approach's strengths. How a mentor engages with their community during those periods is one of the most revealing tests of whether they're worth following over the long term. A mentor who addresses a difficult stretch as openly as a strong one, explaining what the market's doing, why conditions are less favorable, and what the correct response is, they're preparing their students for the full reality of running the income engine. That preparation has direct value when you hit your own difficult stretches, which you will. The growth engine decision was a bit more straightforward. The approach was clear before the mentor search began. We chose the wheel strategy, selling cash-secured puts on quality companies and managing assignments through covered calls, for reasons that fit the million-dollar experiment's structure quite well. The time commitment is compatible with running the income engine simultaneously. Positions are set up at expiry cycles rather than daily, and the ongoing management between cycles is manageable alongside an active trading schedule. The approach is systematic and rules-based, which fits the discipline orientation of the three-engine framework. Depending on your jurisdiction and account structure, the tax treatment of options premium may also be a meaningful consideration, certainly worth discussing with a tax professional who understands option activity. The wheel strategy mentor we engaged with was found through the same evaluation process that we described in episodes 12 and 13. Credibility tests, several weeks of content assessment, and a 30-day trial before committing. What we focused on most in the Growth Engine mentor evaluation was the quality of stock selection guidance. As we discussed in episode 15, selection is where most wheel practitioners make their most significant errors. A mentor with strong selection criteria is substantially more valuable than one who focuses primarily on the mechanics of the strategy. The mentor we use engages with the community on a several times a week cadence, addressing what's happening in current market conditions, how to think about assigned positions when they're temporarily underwater, and how to stay systematic when the market creates pressure to deviate. That ongoing engagement is what makes the difference between a wheel strategy practitioner who stays disciplined through volatility and one who abandons good positions under pressure. One practical note on the growth engine that's worth sharing from our own experience is the most useful week was not week 2, the paper trading week, but rather week 3, the community assessment. The wheel strategy is straightforward to describe and to paper trade in favorable conditions. What it required in practice, though, is the discipline to hold assigned positions through drawdowns, the clarity to distinguish a temporarily underwater position from one where the original thesis was wrong, and then the composure to keep selling covered calls systematically when the underlying is moving against you. All of those challenges are best assessed by watching how the mentor and community engage when the market's making the strategy difficult, not when it's working cleanly. Find a period of market difficulty in the mentor's content history and observe the quality of their guidance during it. The Accumulation Engine is the part of the Million Dollar Experiment's virtual investing org that is most actively developing. As we described in Module 1, it does not receive significant capital in the first year. The 10% of Growth Engine returns is modest in the early months, and direct contributions start only from month 7. The early phase is less about deploying capital and more about building the thesis process and research infrastructure that will inform how capital is deployed when it arrives. For the Accumulation Engine, we've built a curated set of research sources across the areas where our current theses are concentrated. macro analysts who cover the structural shifts that we're investing in, sector-specific researchers whose work helps us evaluate specific opportunities, and cryptocurrency researchers for the crypto-adjacent theses in the portfolio. We're not going to describe these in detail. The areas of thesis concentration reflect our own specific view of the world, and the right research sources for your accumulation engine will depend entirely on where your own theses are going to be concentrated. What we can share is how we evaluate the sources we engage with. The primary criterion is whether their content consistently improves the quality of our thinking about the areas we're invested in. Not whether they're right about every single call, but whether their analytical framework for evaluating opportunities and risks is genuinely rigorous. A source that produces original, clearly reasoned analysis, acknowledges uncertainty where it exists, and updates its views visibly when new information arrives is far more valuable than one that produces high-confidence predictions without showing its reasoning. The support functions in the $1 Million Experiments Virtual Investing Org reflect the same priorities we described in Episode 10. Tax and corporate structure is the one that most materially affects the system's outcomes, and the one that most people defer too long. Running an active trading approach in the income engine and an options income strategy in the growth engine generates activity whose tax treatment varies significantly depending on your jurisdiction, and on how that activity is classified, and on what corporate structure that you're operating within. We engaged a tax professional who works with active traders and investors early in the $1 Million Experiment setup, before the activity was generating significant income. That decision has already proven its value. Getting the structure right before the scale makes errors costly is the most important practical advice that we can offer on the support function side. The peer community component of the $1 Million Experiments Virtual Investing Org comes primarily through the communities associated with the mentors we work with in each engine. Each of those mentor relationships comes with access to a community of other practitioners following the same method. That community turns out to be a meaningful part of the value. The shared learning between people operating the same approach in the same current market conditions is different from what the mentor provides directly, and in some ways, it's more immediately practical. It's the source of real-time insight about what's working and what's challenging right now, from people who are in the market alongside you. That is the $1 Million Experiments Virtual Investing Organization as it stands today. An income engine powered by micro E-mini futures with a mentor whose approach required 3 trials to find, but whose pace and method are a genuine fit. A growth engine running the wheel strategy on quality companies, guided by a mentor with strong selection criteria, engaging with the community multiple times a week rather than only at expiry time. An accumulation engine in early development with a thesis process and research infrastructure being built before the capital scale makes those decisions consequential. Tax and corporate structure addressed early with a specialist, and a peer community drawn from the mentor communities we participate in for each engine. None of it was assembled in a day, or in the right order the first time. The income engine mentor took 3 trials. The accumulation engine research infrastructure is still being refined. The tax structure required several conversations before the right approach became clear. The Virtual Investing Org is a work in progress, a structure that develops alongside the investor running it, informed by real experience rather than theoretical planning. We share all of that not to suggest the process was messy or poorly managed. We share it because the expectation that you'll get everything right on the first attempt is the thing that most often stops people before they even start. The goal is not a perfect virtual investing org. The goal is a good enough virtual investing org to begin with, and a clear process for improving it over time. Those are very different targets, and the second one is actually achievable. The overarching lesson from building the $1 Million Experiments Virtual Investing Org is this: the quality of the virtual investing organization is determined by the quality of the evaluation process, not by the quality of the first choices you make. We did not get the income engine mentor right on the first try, and that is not a failure of the process. It's the process working exactly the way it's supposed to. The 30-day trial is designed to produce exactly that outcome, a confident decision based on real experience with the method, rather than a hopeful assumption based on impressive content. 2 months of careful trials is a far lower cost than 6 months committed to the wrong mentor. That is also the right note to close Module 2 on. The framework you've built across these 8 episodes is complete. You have a GM hat and the trader and investor hat. You have the gap map, the credibility tests, the red flags, and the 30-day trial. You've seen the evaluation criteria for each engine's mentor relationship, and you've seen how those criteria played out in a real virtual investing org. What you do not have yet is the experience that comes from running the system, and no module can give you that. Only doing it does. The gaps become visible when you're inside them. The right mentor for month 18 is not always obvious for month 1, but starting at month 1 is what gets you to month 18 with the capability to know what you need then. Every part of this framework exists to make that progression more efficient, less costly, and more deliberate than it would be without it. The $1 Million Experiment is running in real time, and every weekly update on the $1 Million Experiment channel is a live data point against the plan that we've described across these 2 modules. The trade logs, the growth engine positions, the accumulation engine thesis decisions, all of it's tracked against the blueprint. If this framework is connected with you, watching those updates alongside the teaching content is the fastest way to develop real intuition for how the system operates across different market conditions. Module 3 is next, the starter kit that helps you choose your specific approach for each engine before you go looking for mentors. For those ready to begin right now, the resources page at theinvestingproject.com and the plan and blueprint give you everything you need to get started. For those who want to go deeper into the approach alternatives first, Module 3 covers that ground thoroughly. Thank you for being here for all of Module 2. Remember to like and subscribe so you don't miss Module 3, and we'll see you there.